I also need to thank Art for today because he's substituting for the speaker he originally scheduled. He was originally had a wonderful speaker lined up who couldn't make it, and so he's going to tell us a lot about whether the U.S. dollar is still will maintain its reserve currency status throughout the next few years. So, Art, let me give it to you. Thank you very much for everything.
Thank you for the kind words, and thank you for the certificate. You ready?
Yes.
Thank you. Good morning, members of the Old Guard. This winter, I read Ray Dalio's book on the changing world order. I found it very important and something that we should probably all be more familiar with, at least those of us who are interested in investing. I was not able to get Mr. Dalio or one of his researchers to make the presentation, so I took on that responsibility. It's proven very interesting, but quite a challenge. The book is 532 pages. The website he has is just full of information, including 132 charts and tables in PDF form. And those charts and tables are the basic source of information for this presentation. And you'll find them from very, very varied as to how old they are and where the information must have come from. Because we're in a PDF format as opposed to PowerPoint, I've asked the tech group to pass the slides forward for me, and Joel's going to do that. And Joel, if you would kindly go to page 3. And here we're going to talk about the background of Ray Dalio. Since that's too small to read, I'm going to switch over to my hard copy. But Ray Dalio is a hedge fund manager. Hedge funds, as many of you know, are private mutual funds that are open to wealthy investors and institutions. And because of the limited type of investor, they are able to undertake risks that most mutual funds don't undertake for the average investor. Ray manages the largest hedge fund in the world. It's $150 billion. He has 1,500 employees, and it has achieved a very notable record, as you can imagine, to have attracted that much money. Ray was born in 1949 in Queens, New York. His father was a jazz musician. Ray was not a particularly good student. He was very active and entrepreneurial, but he didn't spend that much time on his schoolwork. Then he went to Long Island University and the Harvard Business School after that. And after Harvard Business School, he came to Wall Street as a trader. And a few years later, at age 26, he started Bridgewater Associates, which is this large hedge fund. He wrote this book because he has done very well. Forbes and others say he either has $16 billion or $20 billion. I'm not sure which. I'm not sure it matters a great deal, which is the correct amount of net worth for Mr. Dalio. He has done well, and he wants his methodologies to be known to others. His seminal idea is that what is happening now seems new to us and may be new to us. And we have a tendency to think it's a new thing that hasn't happened before. But he believes that if you search history, you will find that almost everything has had a past life and has been done before and has occurred before. And that therefore, if we study these things, we can learn somewhat how to predict the future and how to protect ourselves from things that might happen, or learn about things that might not happen that we should also be aware of. And this seminal idea he looks at in terms of empires rising and falling. And that's what this book is about. And empires have 3 major factors which determine whether or not they succeed or fail. That's a Roman numeral 5, if you can see it. First is the financial condition of the country. Assets versus liabilities, more assets than liabilities, more income than expenses, and to the extent they're in debt, it's in their own currency. If you borrow money as a country in your own currency and you have trouble paying it back, you can print more of that currency. But if you borrow in another currency, you cannot do that. So it's important that your debt be in your own currency. The second important factor is the extent to which the people in the country are operating, you might say, on the same page. They're working together. They have the same values, the same goals. And to the extent that that's the case, your country can succeed in your empire. And when that is not the case, that is a problem. The third area is external harmony. That is to say, are you fighting with your neighboring countries, or you have other countries that you are fighting with, or are you at peace with them? When all those things line up properly, the empire can succeed, and when they don't, there's a problem. Then there are other key determinants not quite as important: education, innovation, technology, military strength, etc. Geology down below refers to the extent to which the country has natural resources, such as oil and gas, or copper, aluminum, etc. We're going to examine 4 empires: the Netherlands, the United Kingdom, the United States, and China, and then try to find out where we are now. So if we'll turn to page 4, Ray calls this the big cycle in a tiny nutshell. I kind of translate it into saying, well, to have a world, you need people, and the people have to produce things. So the top chart is the global life expectancy, which for the longest period of time was 25 or 30 years. Now, this is measured from birth. So it doesn't mean that George Washington died when he was 25. It means that George Washington's mother probably had 3 children, and 2 of them died at a very young age, perhaps even in childbirth. And the third one, George, lived to be 67 years old. Then in the bottom chart, we're looking at global real gross domestic product per capita, how much the country is producing divided by the number of people. And he points out 2 important events. The first, the invention of capitalism. Now, I don't think I've ever seen the phrase, the invention of capitalism before, but that's interesting to me. The founding of the Dutch stock exchange, when people could put money in to pool it together with others and invest in an idea or a business, and then also have the ability to sell the stock if they wanted to. That's a stock exchange. Then the other area is the inflection during the Industrial Revolution, when we were able to develop machines, and those machines did the work that we used to do as people. So when I'm sitting in my easy chair reading the newspaper, sorry, I just dated myself, or say reading my iPhone, I may hear a noise and have to lift my feet. My wife has a robot vacuum cleaner, which looks like a large Frisbee. It only costs $300, but here we have a perfect example of a machine doing the work that people used to do. Now, if we turn to page 5, we have a list of things where people have died other than through natural causes in the centuries past. The 4 major areas are conflicts, then natural or disasters, pandemics, and famines. And what's somewhat interesting is the natural disasters are in red, if you can see them at the bottom of the chart, and there's not many of them, though that is subject to change without notice, as Nolan would tell us if an asteroid shows up one day unexpectedly, or at least unwelcomely. So there are not too many natural disasters, but there have been conflicts, which we'll look at the next chart, and then pandemics. Going back to the far left, we see the coquelicetl, if I pronounced that right, I'm sure I didn't, epidemic. And then on the right-hand side, the Spanish flu. What I found surprising, perhaps on my lack of wisdom on the subject, and very distressing, is the number of people who died in famines. And those two largest spikes in the charts, around 1600 and around 1900, referred to famines. That's the gray lines. People starving to death, which is unthinkable to me, but maybe it's my naivete. We turn the page to page 6. Ray focused on estimated deaths from conflict, which is to say wars. And there's two types: the civil wars, internal conflicts, and then external conflicts. And the ones that are the most noteworthy are on the right, World War I and World War II, and included in the World War II is the Holocaust and communist revolutions also. Now, page 7, I have a tickler, so it says, this could happen to you. So we're going to see a number of things which have happened in the past and might happen again and are disappointing or dangerous to us. And if we turn to page 8, at the top slide refers to stock market closures across major currencies. There are times, well, let me back up and say, most of us have our money in our house and in our 401ks or other retirement plans. So it is important for us for the securities markets to be open. But sometime during stress periods, the stock markets are closed. World War I had such a period for several months in the United States. And if you look to the right-hand scale, in 4 or 5 other countries. World War II had more, 6 or 7 different times when stock markets were closed. But the United States stock market did not close during World War II, except in August 1945, when the market closed for 2 days to celebrate the end of the war. But that's sort of the good news, not the bad news. And we can even look far to the right and see in 9/11, the stock market was closed for a brief period of time. The bottom half of the chart, which must have been produced with great agony, shows 60-40 portfolios, which is to say 60% stock and 40% bonds, real returns, which is to say adjusted for inflation, over 5-year periods, and portfolio and stock markets losing amounts of 90%, 50%, 25%, or 10%. And so you just stand back, it's hard to make much sense out of the details, but you could say the stock market goes down a lot and lots of portfolios have losses for lots of periods of time. And that's part of what we have to deal with. Then we turn to page 9, and at the top of the page, we see periods of wealth confiscation. Wealth confiscation, essentially the government takes your money. Now, the United States has had several periods like that. Not, this is, by the way, just since 1900, not really as dramatic as it has been in other places, but the most common one is where gold usually backs a bond or currency, or it did at one point in time, and the government did not have enough gold. There was more currency being printed than there was gold in their Fort Knox, and so they had to detach the right for you to turn in your bond or your cash for gold. Turning to the next page, on page 10, I laugh when I read the title of it, Worst Investor Experiences, though it's certainly not very funny for the people involved. I don't mean to minimize that, but they have characteristics, portfolios of 60-40, real returns down 40%. Well, then you look at the results. The first one is Russia, 1900 to 1918, down 100%. Well, it didn't matter if it were 60-40, 40-60, or what you're in. 100% loss is everything. China in 1930 to 1950, 100%. Germany, 1903 to 1923. So that was the Weimar Republic in 1923, down 100%. Japan in 1928 to 1948, down 96%, et cetera, et cetera. So there are clearly periods when everybody's wealth has gotten wiped out. Then we'll turn to page 11 and we'll see an even bigger loss, that is to say, of one's life. Countries where including internal and external conflicts, lives were lost as a percentage of the population. The top 1940, 1% of the UK population was lost in the decade starting 1940. The United States did not have any periods of 1% loss since 1900. China had a 3% loss in 1940. Germany had 9% and 15% of the populations in the 1930s and the 1940s. Russia had 4%, 5%, 10%, and 13% in the 1910, 20, 30, 40 periods. So these conflicts and wars are obviously horrendous for the people involved. So now let's look at the empires. On page 13, Ray has put together 6 Chinese dynasties, as I call them. We're thinking of empires, but they could be either, use either name. The Tang, the Song, the Yuan, the Ming, the Qing, and then the RC, and People's Republic of China, the current Chinese empire. And let's look down below and see the 1, 2, 3, 4, 5. And these are the stages that Ray has analyzed and decided upon for empires as they grow up, prosper, and decline. So stage number 1 is a country's birth, including new leadership. The second one is the government is built and refined. So the government gets stronger, doing the right thing. The third stage is peace and prosperity. So that's at the top when things are really going well. But also at the top, there's great excess in spending and debt and widening of wealth and political gaps. And then in stage 5, financial position has gotten very bad and there's intense conflict, either within, without, or both of the country. And in stage 6 is civil war. Well, let's see, where are we now? Well, if in both of these charts, the right-hand line shows the People's Republic of China as being in stage 3. So what is stage 3 again? Peace and prosperity. Well, I think that's a good description of China. It is in peace and prosperity. The United States is in stage 5, according to Ray. Very bad financial condition and intense conflict. And we hope we don't move into stage 6, which is civil war or revolution. Okay, then page 13, we go then to page 14, which shows the relative standing of the great empires. And the ones we're most interested in are the Netherlands, the United Kingdom, the United States, and China. There's a lot of information on this chart, or a lot of lines. So what I did is I broke it out to the next page, page 15, looking at the first one, which is the Netherlands, which peaked in 1675 and has been more or less going down ever since. So that was their period of empire power. Turning the page, what happened? Well, we're looking at the top to the Dutch standing relative to other great powers. And it's another picture of it having peaked in 1650 or 1675, and then having gone down for the next few centuries. Some of the interesting charts we have on the bottom two on the same page. In the lower left, we have, they've dug out figures for the number of accounts at the Bank of Amsterdam, going back almost to 1600. And the number of accounts in the bank was low, and then it shot up to a very high level as the country prospered. And then after it reached its peak, the bank didn't do so well, and the number of the accounts at the bank decreased. On the right-hand side of the same page, at the bottom, the Bank of Amsterdam's holdings are shown as a percent of GDP in the Netherlands. And that started out as, let's say, 1%, got up to 7%, and then over the years trailed down to 1% again. And then some more interesting research that somebody did in page 17. On page 17, if we look at the upper left-hand corner, that shows the number of universities founded by the Dutch as a percent of world universities. So that number was 1% before the boom, got up to 7%, and then fell off like so many other things did. They stopped building universities. And then the right-hand side, still at the top, upper right-hand corner, the number of books published as a percent of world books published. So it went from close to 0 up to 11%. I don't know why it had a double top, but it looks like a chart. It looks like it made a new high and should have gone higher, but it didn't. It fell down to 3%, about where it is now. In the lower left, there's a depiction of the share of major inventions made by the Dutch from 1500 on, and it got to be almost 30% of major inventions in the world, and then fell down, of course. And then in the lower right, the percent of exports in the world that were in Dutch currency, the guilder, went from 10% to 40%, and then down again. And we'll skip to the next page, 18, and go to page 19. Another way of looking at the same story. The top of the page is the Dutch East India Company dividends as a percent of GDP went from 0.2 to 0.7, and then way down again. And then a little different take. The bottom of the page shows grams of fine silver per guilder. That is to say, there wasn't gold behind the paper money, but there was silver. And in 1550, there were 19 grams of silver behind each Dutch guilder. And then that fell down to 9. So that's essentially a 50% devaluation. So now let's turn to page 20, and the next country we'll look at is the United Kingdom, which peaked in 1875. Then we're going to see a similar story as we turn to page 21. First, a big, massive expansion of the fiscal state. That is to say, the government finances grew very rapidly in the period from 1650 on in Great Britain. Then on the lower left, we're going to look at major inventions per million. And the black line is the Great Britain, and has ran up from 1 to 7 and then back down again. And the share of major inventions, the black line on the right side of the page on the bottom, has a similar pattern. Turning to page 22, we could look at the British share of world exports, which grew from, say, 15% to almost 50%. And this is, I believe, the amount of, not that just the exports from Great Britain, but the amount of exports in the world denominated in British pounds, because it was a currency that was dominant and used in many areas. Then we'll jump ahead to page 23. More of the same, the share of global debt in the upper left-hand corner. Global debt has gone from 15% to 70%. On the right-hand upper corner, upper box, we have the share of global transactions in British pounds, got up to 50 or 60%. And then inventions in the lower half, we're looking at now the British with the black line and going down, and the blue line going up is the United States. So then the United States started to have more inventions than did the British, and that was part of the US becoming the dominant empire. And then the right-hand bottom shows the percent of global GDP, and the black line is the Brits, and the blue line is the United States. Page 24, it doesn't tell the story particularly well, but in the upper right-hand box, there is a list of who, meaning what country, got the most Nobel Prizes. And it's from 1900 to 1913. I don't know why I guess that's before World War I started. In that case, Germany, Deutschland, had the largest number, and Britain was second, and the United States third on that list. So then we go to page 25, and the next country we'll look at is the United States, which started roughly in 1750 and peaked in 1950. Well, certainly at the end of World War II, the United States had all the money, all the factories, all the people that had, the country was not bombed out. So it was easy to see how we were the #1 empire at that time. And on page 26, I made another copy of just these three empires: Netherlands, 1675, United Kingdom, 1875, the United States, 1950. And I don't know if it's of any significance, it's a pretty small sample, but it took 200 years for the United Kingdom to take over from Netherlands, but it only took 75 years for the United States to take over from the United Kingdom. And then the next page shows China. We can skip over that. And then page 28 has the two countries that we're most concerned with, the United States and China. And in a sense, this tells the whole story. The United States had a tremendous boom, reached its peak, and then it's selling off, so to speak. It's declining, at least on a relative basis. And China was down in the dumps and has made this miraculous increase. So page 29 talks about what are the factors in the transition of empires. We'll turn the page and see at the top, again, three big cycles: big debt money, then the big cycle of internal order and disorder, and the big cycle of external order and disorder. Then the other things that we saw listed earlier: education, innovation, cost competitiveness, military strength, etc. Now, page 31 asks the question, where are we now? On page 32, we'll start looking at a number of different areas. The panel on the upper left shows the debt burden, where the higher it is, the worse off you are, and it shows the directional arrow also. So the United States is on the left. It has the most debt, and I think that's an aggregate. Certainly Japan has more debt relative to GDP, but we have very large debt, and our debt is increasing, and there's no way for our debt to do anything but increase in the current situation. China is the third from the right. It's CHN, that's just below average, and its debt is also increasing, but it's not nearly in the problem area that the United States is in. Then the next box shows reserve currency status, with the USA being on the left, the highest, but the arrow is heading down. Things are getting worse in that regard. Europe is second, Japan third, both heading down. And then going over to, we see China is low, but has heading in the upward direction. But it would seem like it'd be an awful long time before China could become the reserve currency for the world. Turning the page to page 33, we have measures of relative internal conflict within the country. So on the far right is the United States. We have a great deal of conflict in the country. I think we all feel it and are very upset by it, but none of us know quite what to do about it. But it's high and getting worse. China is the fourth from the left, and it's flat. And I don't know quite how they measure that, because some of these countries, as you know, if you criticize the government, you aren't around the next day to criticize it anymore. The most interesting thing, in a way, is the bottom scale here, which shows the US internal conflict since the country was started. The period around 1780, of course, was the Civil War, the Revolutionary War, and a lot of people wanted to break off from England, and a lot of people didn't want to. So that was a period of high stress within the country. And going to the 1865, the next large bump, that was the Civil War, which of course was a major source of conflict in the country. And then going over to the 1960s, we had the Vietnam War, we had racial disturbances, and that was the period where there was the Democratic convention in Chicago had a lot of people were upset. But if you look to the right where that black arrow is, it's shocking if you read the newspaper or you watch television to see how much conflict we do have, but how much less conflict we have internally than we did in several other periods. Now we'll turn to page 34, which has at the top an interesting little tidbit about the percent of congressional members' votes which are cast along party lines. As we know, it seems increasingly all the Democrats vote together and all the Republicans vote together, and there's not as much independent thinking as we would like there to be. If we go to the right hand on the bottom, that is the right hand, that shows the United States central bank, the Federal Reserve, balance sheet as a percentage of GDP. And in that period, since the 1980s, we went from about 7% to 35%. So there's been a massive printing of debt by the Federal Reserve, much of it in relation to COVID and trying to help people who were in that difficult period. So it's not like we just wasted all the money, though certainly wasted a lot of it, but it put us in a terrible financial position. Turning to page 35, here's the breakdown of internal conflict, starting at the right-hand side, political conflict, on the left is internal strife. I'm not sure exactly what that means, but there's two types of strife that are different, but also rising to a high level, but still below the peaks of the past. At the bottom of the page, we have pairs of countries. The lower left is the USA and Japan. How is the United States getting along with Japan? And the level of conflict is very low there and flat. But if we go to the far right-hand side, we see the USA and China. That is the highest conflict shown. And the arrow, red arrow, is pointing up. That is to say the conflict level is getting worse, more conflict. Turning to page 36, we have a time series on the USA and China conflict, where for a long time there was not much conflict. There wasn't much China from way back, as we'll see in a few charts ahead where we are now. But then starting in about 2005, the amount of conflict has risen over time. It had a dip, but it's still much higher than it was. The chart below shows current military strength, and the United States and China are both on the left with very high military strength. The US with the arrow pointing down, so we're more powerful, but we're going in the wrong direction. And China is less powerful than we, but is getting more powerful. Then we'll turn to page 37 and look at the growth rates. Certainly the wealth of the country depends to a great extent on the growth of its GDP. China is from the left, the third one up. It's growing about 4% a year. And that is actually lower than it has been growing, but that's the estimate for the next 10 years. And the United States is about in the middle and about 1 to 2% growth rate. So China continues to grow faster and get wealthier faster than we do. Turning the page, I said to page 38 that natural disasters have not been that big a factor in the country's success or failure, but the number of natural disasters is increasing. This is hurricanes, floods, and things like that. And the cost on the lower pane in real dollars is getting higher. So there's more of them, they're getting more expensive. Now we go to page 39. There's a chart that's of climate change vulnerability. Not sure where this came from, but they've dug out so many things in this book, it's phenomenal. The United States is about the seventh one from the left. So we're below the line, we're below the average in vulnerability for climate change. Those of us, which is all of us who live less than 100 miles from the water, may not be quite so convinced of that. And then China is about 7 or 8 from the right. So China is more vulnerable than the US in terms of climate change, according to this measurement. Now, page 40 shows the development of China since 1949 and 1978, 2 periods that were picked. Let's look mostly at 1978. So the real GDP per capita, per person in China in 1978 was $609. And in 2018, it's 15,243. So that's a 25 times increase. So the economic growth per person has gone up dramatically. The share on the second line, the share of world GDP in China has, since 1978 and 49, it was also the same thing, 2% of the share of the world's GDP. And then it's gone to 2018 to 22%, up 11 times. The next line, population below the poverty line of $1.90 a day, if you can imagine that. But in 1978, 96% of the people in China were living below the poverty line. And today, it's only 1%. Urbanization's gone from 18% to 59%. Literacy from 66% to 97%. And years of education has gone up also. So China has had some unbelievable boom. Let's skip the next 2 pages and go to the summary of, in the last chapter of the book on the future. Let's see, page 43. And we'll I picked out some things that I thought were memorable. Well, I'll go down to the first one, the second one. While extrapolating the past, this is the comments from Ray, sort of thinking things over and talking about where we're going. While extrapolating the past is generally a reasonable thing to do, be prepared to be surprised. There will be paradigm shifts. Identifying and understanding and adapting to paradigm shifts is essential. Then I like this one. In the market and in life, to be successful, one should bet on the upside that comes from evolution that leads to productivity improvements. But don't bet so aggressively, because cycles and bumps can come along and they can knock you out of the game. That's some pretty good advice. He says, innovation and inventiveness are clearly the most powerful determinants of a country's conditions. Evolution is accelerating and most people will benefit. Now, how about the next one? Quantum computing with AI, artificial intelligence, will be to traditional computing what the computer was to the abacus. Now, that's something to chew on. If that happens, the place is going to be a lot different. Then the good news, bad news, inventiveness and increases in living standards will probably get a lot better, a lot faster, if humanity doesn't kill itself first, with my underscore. So let's go to the next page. Let's start with the third line, the major reserve currencies. The major reserve currency countries are late in their debt cycles, meaning they're up to their eyeballs in debt, and wealth will be distributed to the have-nots. The biggest risk in the long run is the currency value of money. Then he repeats the point even more clearly. So the big risk is not that those big debtors will default, it is that creditors will hold assets that will be devalued, i.e., that the returns from holding debt assets will be less than the inflation rate. What about the US dollar? Well, most probably it will decline analogously to past reserve currency declines, slowly for a long time, and then very quickly. So that's the story as I read it from Ray Dalio. He's a brilliant guy, and there's a lot here to think about. So yes, looking at the last page, that's what the book looks like. I won't have questions and answers. We'll have questions and comments from you and others who have something that they'd like to discuss after hearing that presentation.
Okay, so so only comments, not questions, but still, please.
Well, I mean, no, questions are fine, but don't expect me necessarily to have the answer.
I understand. You can make comments too, and we will not take your comments as necessarily, the truth coming from God. We got that. But still, I urge you not to simply take the mic and run with it for 10 minutes. Everybody keep your comments pretty crisp and focused. So please, otherwise we'll just run out of time, and very few people have a chance to say anything. So Ron Langer, you're first, and I will send you an unmute request.
Yes, does the book say anything? What would be the impact if the United States dollar or if the United States fell back to say where Britain is now, that the dollar is no longer the dominant currency and the Chinese currencies, they took over based on oil prices, and the United States just fell back to second or third place in that. Was there anything about what would happen to us?
Well, if the dollar is no longer the dominant currency, what that means is that if we borrow money, we might have to borrow it in foreign currencies. And if you borrow it in foreign currencies, you have to pay it back in the foreign currency. And how do you get those? You have to buy it. And if your currency is going down in value relative to those foreign currencies, it will cost you more and more to buy them. So it's really a big deal for the US to have a reserve currency, because if somebody borrows money from us, we borrow money from somebody, we can pay them back with the dollars that they lent us, even if those dollars are worth less.
Thank you. Al Aho.
And very intriguing talk, Art. I spent the last week reading this latest issue of the Journal of the American Academy of Arts and Sciences on artificial intelligence and society. And it gave me great pause, because as you're probably well aware, artificial intelligence is being widely used in many businesses and many areas of human endeavor. And the problem with it is we really don't understand how these AI programs work. That's one of the great problems. But what the book, the many articles in this book say is that, is AI inimical to democracy? And I'm curious as to whether your book talked about, is democracy a viable way of running a long-term empire?
Well, there's certainly the issue as to who's making decisions, and if decisions are being made by machines, we don't know exactly how those decisions are being made. That does seem to be, in some people's minds, a threat to democracy.
Yes, the essence of the argument is that people want to train artificial intelligence systems on a representative sample of data. Now, in a democracy, you have some people who are very much for a given concept and some people who are very much against a given concept. How do you then find a representative sample of inputs to explain which of the two contradictory points of view the programs that regulate our lives should take.
Yes. That is an issue, for sure.
So something to keep our eyes out for.
Okay.
Okay, thank you. Nolan.
A couple of quick comments. I was very happy to see the graph show the civil dissent and disorder of 1968 going just about off the charts. At Columbia University, I was at the barricades, and so I like us all to relax. You know, we think we're in such horribly divisive times now. It ain't that bad a deal. Secondly, I want to point out the difference that he did early, that Ray did early, between borrowing and printing your own money and going to other countries. The number one holder of US debt is the Social Security Administration. You see $30 trillion of US debt and you think that we're on death's door. 10% of that is owed to the Social Security Administration. We owe China 1 trillion, we owe Japan 1 trillion. So you want to try and keep that in perspective. Also, I'll give a big shout out to cash is king. I have never believed in the 60-40 Wall Street wisdom that all those charts show about how investments do with a 60-40. As Art knows, he's in a little group with me. My bond allocation has been zero for 10 years. As long as the Fed was at zero, I was at zero. I guess I'll leave it at that.
Okay, I'll slip in a question here. I have a question about Ray Dalio himself and his success as hedge fund manager and investor. And you said at the beginning that he claims that he uses this kind of historical perspective analysis and understanding all these long trends and things as a way of being successful in his investments. And I'm not sure that I understand the mechanism there, because you can't hop off one of those curves and onto another if it's, you know, in a different century, and, you know, maybe it's a different country. I mean, how do you turn this insight into successful marketing investment strategy?
I don't know. I don't
It's
know
for
how
discussion. Maybe somebody else knows the answer to that one.
Yeah. I've never analyzed this fund,
Well,
unfortunately.
Ray Dalio didn't get to be a $20 billion man for no reason. As is noted, there's only 8 or 10 people that understand what he's doing when he's trading.
Yeah,
So
I
he
know
doesn't want you to know how
Well,
he's
he-
making his decisions.
He claims he wrote this book so that he could tell everybody, and then he tells us about historical trends. So, you know,
Hey, well,
I'm missing that. Maybe that's you know, it's 495 pages. Maybe that's on, you know, page 300, 425. And anyway, so enough on that. So Peter Merritt, you're next, and here I'll send you an unmute.
Okay, yeah, very interesting talk.
Thank you.
The data finishes mostly in about 1978. From the data, I believe, and I thought this before I listened to you, which was very interesting, I believe China is declining. I'm the opposite of what a lot of people think. I think this is the beginning of the end of China. The data, I believe, showed China peaking in the book and a little bit beyond that. But now, talk about civil unrest within China, very low, but you also point out it's unknown. I think it's probably very high. The inventions they've had, to a large degree, have come from the West, especially the United States. People now around the world are waking up to the threat of China, I believe. Around the world, that means Africa, everywhere. I think the real new power in the future will not be China, it will be India. India does have this climate change problem, and they have many other problems. But their inventiveness, their tremendous intellectual capabilities. Anyway, I've said enough probably. I think the data shows the peak of China, and I believe it's in decline, and China is in big trouble internally and externally around the world. What do you think?
Well, there is, as I understand it, that China's population went down last year for the first time. I haven't seen that widely, but I heard an investment manager quote that statistic. And that would be very supportive of your view that it has peaked in power. And maybe that will be the case, but I don't know. It doesn't seem to me that way from what I gather talking to people. I have a friend who's quite knowledgeable, who's Chinese, and is educating me as to how people think about the world in China. We all failed in thinking that the Chinese would want the same thing that the other countries want, and that is you invite people into the economic system, let them have jobs, trade with them, they get wealthier, we get wealthier, we're all happy together, we don't want to take over each other or have wars. But China does not subscribe to that theory. China subscribes to the theory that there's a long history of China, and it belongs as the top country in the world and the dominant country, and that's their lot in life to do that, and that's what they should pursue. And that's different from the way we think. So if they don't succeed, it will be because perhaps the population is going down, or perhaps for other reasons. I don't know.
History has shown that in the long run, their form of a government does not work, and democracy overall does work. So that's also a part of history. We will debate, you mentioned about democracies. Eventually, in the long run, maybe not the short run, democracies are the best form of government. And for wealth.
Well, I know my friend says the Chinese people look at our government and how Donald Trump and Joe Biden, and they just shake their head. They can't believe that we put up with these people.
Yeah.
Would you rather have Xi in charge?
I'm sorry?
Would you rather have President Xi in charge of America? We'd all be locked down.
No, not by the way they operate, for sure not. But I'd like our system to be fairer. So that's a whole different story.
Well, anyways, time to move on. Marcel, your question is next.
Hi. So questions, not so much, more comments. First of all, very quickly to the point about, the Chinese people look at democratic systems and think they're messy and chaotic. Okay, but the people of Hong Kong don't quite seem to agree, and the people of Taiwan also don't quite seem to agree, and they're Chinese. So, there's a diversity of views. Ray Dalio is a capitalist, and he seems to be approaching historical analysis from the assumption that history is all about conflicts between nations over who has relative, and that's the key word, relative dominance. And that, just as in capitalism, if you don't grow, you die. If you're not growing, you're dying. If you're not dominant, then you're a loser. I think the Dutch will massively disagree with that. And if we look at the Netherlands and perhaps Great Britain, the UK, dispassionately, these folks are among the richest people on earth. They have excellent health care for their people.
Yeah,
They are long-lived.
it's good.
Their people don't starve. They have political stability, long-term political stability. So they're not dominant. Who cares? And I think that's what they would say is, who gives a damn? Who wants to be the dominant power in the world? Because all that gets you is headaches. The other classic historical analysis of rise and fall of powers is Paul Kennedy's book, The Rise and Fall of the Great Powers, from which he wrote during the Cold War. And if anybody's read that, his primary thesis is that the problem with empire is they acquire obligations faster than they can use their dominance to shed obligations. So in other words, obligations increase, and eventually the obligations become too much for them to carry. and
Yes.
their empire collapses as a result of that. And again, whether the obligations are financial or military alliances or some combination of all. So the corollary is that if you want to last as an empire, you want to be very careful in acquiring obligations and do that very cautiously and very carefully. And also to maximize not hard power, but soft power, because soft power is not about obligations, but about convincing folks, convincing other nations, which incidentally is where the United States has excelled throughout the 20th century. So different parts of the world will tell you the United States is very much about domination when it wants to be, and that's a lot more of the time than Americans recognize or accept for themselves. But by and large, American power has been softer than most other empires in history before. And that's, I think, one reason why the American domination of most of the world has been relatively accepted, let me rephrase, far more accepted, relatively speaking, than in Rome, for example, which was all about, okay, we're going to come and stomp all over you and then you can deal. So anyway, that's my thoughts. Personally, I think that while Ray is a very successful capitalist and good for him, the applicability of his capitalistic analysis to historical trends has severe limitations. And I'll leave it at that.
Nobody actually has all the truth. These are only conversations. That's great. Thank you, Marcel. Now look, at this point, let me point out that although it's 11:42, Art started really late because we had so much stuff in our business meeting, and we're going to have an open mic session afterwards, so we don't really have a hard stop at the other end. But let's not do this forever. So we have two more hands raised, and after those two, let's call time. Okay, so
Let me
Miguel.
just respond, make one comment to Marcel's, in
Sure.
response to Marcel, and that is, it's a good deal being Dutch if you have the United States there in case the Germans roll tanks into your country. Not so good deal if the United States isn't there.
Yeah. Herb Waddell, you have to unmute. There you go.
Yeah, I've been thinking about our old friend Gordon Chang. who
Yes.
spoke
Yes.
on the subject of the impending collapse of China.
Yes.
Lately, I think he favors Peter Merritt's view that China is actually in decline. And we'll find out in the next year or two, because if they don't invade Taiwan now, they never will have a better chance. And so maybe we ought to have him back for a fourth time to talk to us. That would be interesting.
If he's willing, we'll sign him up.
Well, okay, well, that's my thoughts. Thank you.
That's great. You know, and of course, if they do invade Taiwan, there's the other downside, and that's the military conflict, which is often signaling the end of an empire because they don't do so well. So, Miguel doesn't seem to be back. Oh, okay. Miguel, you're back. Go ahead.
Okay, thank you very much. I'm sorry, I had a microphone problem with my
Sure.
headset.
We know.
As I was saying, Art and I have had many discussions about finance and economics in the past. Book's very interesting. I have two kinds of observations, though. On the charts, first, this is the minor observation. I can't tell which charts are normalized for percent GDP or percent per capita. So, you know, if you tell me that China grew faster than the United States for the last 20 years, I don't know if that's a percent basis or if you're telling me that a 2-year-old grew faster than a 20-year-old. And so, you know, those have different weights and different values. The other thing is, as he's going through history, and this is my primary observation, as he's going through history, he's not looking at the epochs or the waves of history that he's going through. He starts in the colonial period when the Dutch and the English, the Dutch in particular, started with many colonies, and the English took over. There's the colonial period where everybody's expanding. I saw a chart the other day that there are 22 countries that England has never invaded. Over that period in 1880, that was the height of the empire, the imperialism, and that tended to wane after 1900s. So England basically started losing their colonies left and right, and so did the Netherlands, especially in Africa, with wherever. So the United States was never really a colonial power. I mean, we have two colonies, Puerto Rico and Guam, but that doesn't count. We've never been a colonial power, so our growth was not affected by the end of the laughing war. Was not affected by the end of the colonial period. So the other thing is that as we grew along, I don't think it's an accident that the Industrial Revolution took off in the 1860s, right as the end of slavery happened, and we needed something to power besides muscle. So, I think those two things are kind of somehow related, but I can't tell you what. So I think that what he's saying about China, they've done a great job if only 1% of their population is in the poverty range. We have a higher percent. The Swedes may have a different opinion as to which country is the dominant because they've never been in a war in the last 100 or 200 years. And they have a very good standard of living. They're very happy. As far as the internal, the unrest and whatever, Civil War was about slavery. 1960s was about civil rights. You can make a case that in the 2000s, Black Lives Matter. So we have a characteristic in our country where we need to agree to end racism is not a debate. It's an agreement that we need to make, and we're not really making all the way around. As far as the insurrection that has been, instigated internally for the last 20 years, we know how to stop it, but we haven't got the votes because everybody votes across their party. So I don't think that the U.S. is on a decline. I think that if you look at it, in your manufacturing in 1950, the peak in 1950, we stopped making stuff here, but we started making stuff there, China, India, wherever. But the capital that controlled that manufacturing was still here. So, your system, your method doesn't give us any credit for manufacturing iPhones or computers or whatever. But the capital, Apple, an American company, is Dell. So I'm not sure how you measure the manufacturing. I think that's about it. I think we're probably going to be okay as soon as people start realizing that the insurrection is not necessary.
Thank you, Miguel. I think so. On that note, let me ask Art, would you like to respond to that or have any final concluding comments?
No, only comment I have is that we really, from the investment side, not much we can do about the politics. But from the investment side, it does seem like we're going to have inflation, and we always have. We've had 3.14% per year inflation since the Federal Reserve started in 1913. And so we always had to be concerned about inflation. But it seems now with the debt that we have to be even more concerned from an investment point of view. So it was a great ride, and thank you. We'll have to stay in touch on this subject over the years.
Thank you. So Steve Varley, you're up.
Actually, I think I'm supposed to thank Art Williams for an excellent presentation.
Good.
Earlier, I thanked him for his monthly program chairmanship, which he did. But this morning, he showed us his presentation skills and his knowledge of a very important topic. Is someone going to present a certificate for me? There it is. Art, you're getting 2 certificates today. One for being the monthly program chair and one's for an excellent presentation. Thank you, thank you, thank you.
Thank you very much.
I'm done.
It was
Back
great
to you.
working with everyone.
Okay, well, thank you, Art, and thank you, John. Art, great presentation. Certainly, huge amount of food for thought.